Okay. Right, and first, before we start, Tom would like to know, have we got anybody who's very new to VSA here? He'd like to get a feel of who we've got in the room, if you're very new or how much experience you have in VSA, just so he knows how to pitch it. So if you could type in the question box if you are new to VSA, that would be very helpful, or how long you've been studying VSA or trading VSA. Right, Park's very experienced, I know. Thank you, Park. Intermediate, Tom? Long time, Chester. 12 months, year plus old, very long time. Intermediate. So, Tom, we've got plenty of experienced people here. So I'm going to hand the microphone over to Tom. Here we are.
Thank you very much, Rita. Yeah, hi everybody. It's Tom Williams here. As usual, speaking to you from Worthing. It's a little resort town on the south coast of England, about 40, 50 miles south of London, and it's now getting cold. but cold, I suppose, not so cold as some parts of the world. But anyway, we're here, we're up and running. And the chart, I assume everybody can see the chart. This is a chart of the Dow Jones 30 Industrials, the future. And if you listen to the newsletter last week, it was actually on that day there, right? And I think I said, expect higher prices. Now, that's fine. We do actually have higher prices, but there would be a lot of bloodletting in between by the look of it. But there you are. That's how it goes. There's been a lot of supply holding this market back. Now, we've drawn a fresh trend line. You can do that. The computer will store all the old trend lines, and that's what makes those what they call them, Rita? You know, the old trend lines when they cross. We don't even know what they are. It doesn't matter. You'll know. Trend clusters. Sorry. Thank you, Colin. I'm glad you know more than we do. But I mean, I don't, be quite honest, use the trend clusters all that much. But when you look at them, you know, I look at them, and I'm even surprised myself how they work. They only work once the data reaches them. And you'll find that the actual closing price does not like the trend cluster. And very often you'll see a trend cluster and the data will dart up through a gap in them. It's quite surprising, even though those trend lines were drawn months, I don't know, ages ago. But it's quite fascinating. But to be quite honest, I don't need them, because we want to get you up to a level where you can actually read the chart. And therefore, all this other stuff you don't really need. All you want to know is whether it's going up or down. And once you can do that, then of course your skill as a trader kicks in, and then you're on your way. No problems. But anyway, we said last week, sorry, what's that? Sorry, reasons, that's here. That's here. So to us, or to me, last week, it was that day there, Friday, right? We said expect higher prices. But because the market is so devious and cunning, it almost stumbling along here. Little surge up here, look. But notice here that there's an up bar, a narrow spread with high volume. That is weakness. But despite that, look, it's been marked up today, and it looks as if it's heading for that top trend line. Although there's a yellow box there, but of course that's created because the computer does not realize that there's several hours to run in the pit, right, or the market, and that's why it's there. But so you don't analyze a bar until it's actually finished, and then you analyze it. We can see how the Dow has trended nicely. I think we showed all this previously, right? I know it's dead easy in hindsight. A test, look, basic test. Read all those dialog boxes carefully. They've all been re-edited by Philip Friston, who's done a very, very good job. Brought it up to date. Now, I think we might have mentioned this last week. There's a red bar signal. Okay. No demand. Right, fair enough. Okay, so you've got no demand in the rising market. And that's what caused these two bars here to go sideways and even fall somewhat. Now, the professional money would be fully aware of that. They would be sitting there. And I've said many times in the past that if after red bar in a rising market, you see a test or a green arrow, especially if it comes on the bar afterwards immediately. But this one didn't appear for 3 bars. It tells you there it's a test. Now, I know it may not look like a traditional test because it's on a blue up bar. But if you look on it, don't forget this is a daily chart. That test was originated in a lower time frame, and it definitely went down there. And the volume would have been low. And that's what created that. The professional money see that. They see the successful test on a lower time frame, and they jump on board. But that test there is strictly because of that red arrow there, that no demand. Now, we don't ask too many questions and whys and wherefores. You'll never find out the truth anyway. So it's a complete waste of time, really. Recognize it as what it is. It's no demand. Professional money have eased off the market, right, for some reason or other. Now, there's a test. That means as soon as you see that, especially if it's a next bar, if you see a test on the very next bar, then you should jump in because it's going to go long, right? And then up. So there it goes up. So the market there, we anticipated, I think we said higher prices. Expect higher prices. Don't forget the word expect. Now that word is used deliberately, expect. Because if nothing happens as you expect it to, then surely that's telling you something as well, isn't it? But the market must be so weak that it's unable to do what it's supposed to be doing. So keep that in mind. But you must recognize the principles. We were following the markets yesterday, Rita and I here, and it was so easy. It was unbelievable. I mean, it really was. It was so obvious, unbelievable. Now here up, right, but here we've got some supply, look, heavy volume, narrow spread up bar, right, this could easily go up to that top trend line, but you've got weakness here, right, but traditionally, now I know we don't normally do this, traditionally in the market, they call it a Christmas rally, and so keep that in mind. But the market's shown a lot of supply present, as we can see on the intraday charts. But, oh, excuse me. Now, this is Dow Jones, right? So it's going up. Now, is there any questions before we look at another chart? One.
There's one on this. Question is, this bar, wasn't this a test? This bar here that I'm pointing to there, that one, yes. Was that a test, was the question.
Let's have a look. Where's it there? Well, it certainly looks like a test, doesn't it? You're right. It certainly looks like a test. Well, it is a test, isn't it? Look. If you were describing a classical test, that would be one. Down bar, narrow spread, close on the high, and look at that volume. It's very low. In other words, the computer's colored it pink. That is definitely a test. However, next bar's down for some reason or other. Right? And then the market knows that there's not a lot of supply there, look. And they ram it down here on a final test. And don't forget, the market's not there to help you. It's there to trick you. It's there to make you lose money. It's not there for your benefit. I've never ever heard or received any information that would normally help a trader. Why should they help you? If you knew there was something where you could make money, you're not going to go around telling everybody, are you? Not if you're normal. You would take advantage of that, and then you might tell everybody. But you could probably, there's reasons why that test didn't work immediately. Could be some news or something.
Go on to another chart. There's no questions.
Right, okay, let's look, Rita, at the S&P 530 minutes. As I was looking at that looked quite interesting. That's it. Now, look at that horrific upthrust here. What time did that happen, Rita, about?
That was that. Oh, hang on, Tom. That was that news.
Oh, some news, yeah. Now, right, so they marked it up on the news, look. Now, interesting enough, there's a sign of strength on the right of the bar before.
Oh, gosh, it says bag holding.
Bag holding. Wow. That's interesting. We don't see many bag holders.
No.
Can you all see that? That's very interesting. Read out the bag holding, because that's interesting, actually.
A narrow spread down bar with ultra-high volume. This is a rare indicator, but one of the strongest to appear. It should be into fresh, new, low ground. A point is reached when the herd panic and unload their holdings at rock-bottom prices. The narrow spread tells you that the professionals absorb all the supply coming onto the market, effectively holding out a bag to collect the panic selling, hence the term. If they had not done this, the spread would have been wide. And in the background, there should be a clear downtrend in the background. Remember, to stop a fall in the market, demand has to overcome the supply that is causing that fall. By its very nature, this has to appear on down bars. In the future, prices are now expected to rally strongly. Any shakeout or successful testing back into the area of the bag holding is a very strong sign of strength.
Now that's an interesting signal. We don't get many of those for various reasons. But anyway, if you're on your toes watching that, you might have been alerted. But of course, this market, it does this deliberately because it's not there to help you. They do that to lock everybody out of the market, to panic as many people as possible, catch as many stops as possible. Anybody that was short are going to panic, right? Even people that wanted to be long might say, oh, I must get in on this, and they buy near the top, right? Now, we've even got a signal up here.
Supply coming in.
And it's true, supply is coming in. And the market does not like that very, very high volume on an up bar like that closing. Notice it's closed off the high as well a little bit. And also notice the next bar is down. So the market falls. Now there's a blue bar here. Now the volume is still quite high. It's not exactly no demand, but it's still supply there, look. Okay. Another up bar, and there's still supply present, look. Now, if you read the dialog box on that bag holding, it said if the market comes back down to this level and the volume is low, it's not low, is it? Look, it's back to that level, yes. But look how high it is. Supply is still around. It's not ready for you to go long on. You'd expect a test of some sort showing that that supply has disappeared. Now, it's interesting. That's a 30-minute chart. Any questions on that? No questions. Not yet. People have to get there. It's a game of concentration.
There's a question now. Oh gosh. Okay. Aaron says that bag holding happened before the US market opened. The volume was high relative to pre-market, but low relative to after the market opened. Should we compare pre-market volume to volume when the market is open?
Well, that's the only fly in the ointment here, because as soon as the S&P pits opens, obviously the volume's going to get very high automatically because of the amount of trading going on. Now, what we do, it's best to use the volume that's had in the past. Right, now you're quite right. That bag holding I don't think would have come up unless the volume had been quite high. And that's what happened before, look. I think that's it there, look. So you've got down bar, look. Here, look. Right, and there's the high volume, look. Now, that's high because relative to the previous volume. Now, of course, soon as the S&P kicks in, look, that drops down. But it was still, relative speaking, high volume to what it had been previously. So that's, unless you're using tick volume, I'm hoping Gavin gets his act together and we get tick volume on these charts eventually. And then it won't do that. It'll all be proper even, because don't forget, volume is activity. The amount of activity that's taking place, that's all we're interested in. And then on that activity, what did the market actually do? That's what we're interested in. And it looks at the moment, there's a lot of supply around. And we saw that on the daily chart, that Dow, as it went up, right, it might be marked up because Friday, don't forget, they could be extra devious on Friday because they want to influence the news over the weekend. They want to influence the newspapers, the magazines, the television, right, the money programs. And you get all sorts of weird stories about what's happening. And they know from experience that if you mark these markets up on a Friday, they'll come out with all sorts of fantastic good news. Right, so listen to the news by all means, but always keep in mind it's not there to help you.
Yes, and as Tom said, you want to see the market reaction on that activity. What did the market do? And I often look at, that's a good question. Often when the market opens, there's a lot of activity, of course, and it creates a lot of volume. And my way of and often a lot of signals will start coming up, obviously. because of that, because that volume is high compared to the Globex. And the way I compensate for that is I want to see some confirmation, I want to see what the market did on that volume. So it's always good to be careful at the market open. Rafael is asking, 2 bars from left, is it no demand? Do you mean 2 bars? Do you mean this one here, Rafael? Is that the one you're talking about? From right side of chart? Yes, that's it. So he's saying, is that demand? No demand. But then we've also got a question here from Priyesh, and I think, Priyesh, do you mean this one? Is that no supply? So, Tom, how would you read the chart and interpret that?
Well, I would read it. It's just going to go sideways at the moment because there's nothing all that obvious. You're quite right. There's a red down bar there. There's not a lot of supply, look, and that's the reason why it hasn't fallen, look. And then here, there's no demand, and that's the reason why it's gone sideways. You can read these bars, and it's very interesting. If you just think of supply and demand, nothing else, something will happen. But don't expect the market to help you. Now, we did some good trades yesterday on the pound. Rita, can you put the pound up? Okay. Now, what's interesting too, I don't mind, half hour, it's all the same really. Rita can put the pound up because we did some good trades yesterday. 1 hour. Okay, now you can see, was that it yet there? Or was it? No, it's up here, look, here we are. Now this is where it's pretty obvious, look. We've got up thrust here, look. No demand, more or less. Another up thrust. It's screaming out at you that there's weakness there. That's be a distribution cap. Okay, so that was shorted, and thank you very much. Did all right on that. Now Rita does a blog on the internet, and she's going to invite as many people as possible to join in, and she describes what she does. Now, the reason why she's doing this, because if you force yourself to write a blog or a newsletter, especially if it's going to go public, then you really, really concentrate, because that's what the game is all about. Because you would be embarrassed if you put something there that was totally wrong. Right, so to try to avoid that, you concentrate. And that's why she's doing it, and I think you'll find there's quite a good lesson there. Rita?
Yeah, I decided to. I've not long done it, and I should have done it before, to write a blog, and the reason is because it makes me accountable, not only to other people, but also to be accountable to myself. And I'm sure that other people have been through all the same experiences as I've had, and we're all the same. Human beings are fundamentally, and often being impatient, and it could be anything that happened during the day or something that's going on in my life that makes me feel impatient about my trading, and often not waiting for those principles to arrive. And no matter how much somebody tells you year after year, you must wait for your bus to come in, as Tom says, you must wait for the principle to arrive. Anything else really is gambling, I suppose, to me anyway. And I know if I click that button and I haven't waited for a clear principle, I will immediately have doubt in my mind. And as you know, that the market is there to trick you, and all sorts of things happen in the course of a bar, and you can be panicked because you yourself are not sure. So I thought, I'm going to write this blog and I'm going to put all my trades on here and all my experiences. And what it's done is that, that feeling of, I know I've got this feeling, yes, it is weak, it's going to go. But there's no principle clear. I think, hang on a minute, I wouldn't tell somebody else to trade that way. So why am I doing it to myself? And that's the whole point of it. You need to be accountable to yourself. Often we're not good to ourselves, and we're not nice to ourselves, but we're often good to other people. So that's why I've written a blog. So hang on a minute, I'll just type it in the thing. I'll put the address of my blog there. Oh, good. So Aaron can relate, yes. Priyesh, no, it's completely separate to the VSA club. I just found a blog site and thought I'd just create one. So I think I've got so far about 12 messages on there, and it just basically is my trades, and you'll see that they are pretty simple actually. And I have a very simple attitude to it. And you'll see it. I won't explain it now, but you'll see it for yourself. So that's my blog, and I'm finding that that's helping me tremendously to be disciplined. And that's the whole thing about VSA. You have to be very disciplined and very patient. And someone said that to me very early on. It was Sebastian Manby, if you remember Sebastian, who I'm still in contact with. And when he said that, I thought I understood what he meant by being patient and disciplined. But actually, I had to experience a hell of a lot to know what being patient and disciplined means. But if you are, and sometimes it's painful, but if you are patient and disciplined, it will pay off and it's well worth it. So a lot of people will say to you, less is more. You only need one very good, clear trade, and it will make up for all those rubbishy little trades or losing trades that you might have experienced. So that's my blog, folks. Tom, Aaron, can we subscribe? I think you can subscribe to it. You just go to it on that address that I've written there, and there is a place, I think, somewhere where you can subscribe. Tom, Jack wants you to comment on the 5-minute ES. There are some tests, he says, but this is the 5-minute of the mini S&P.
Yeah, hi Jack, Tom here. Right, 5 minutes. Okay, so we got a sign of strength back here, look, an automatic signal. No supply or test. Please read those dialog boxes. And the whole idea, the main idea of these signals, automatic signals that appear automatically, and some of them are 10, even 15 years old, they've been working. And they will be working because this is how the market works. Read those. The idea of the signals is to study them very, very carefully, study the dialog box. Now, every time a sign of strength comes up, right, it will not look the same as the last time, not in minute detail, but the principle will be the same. So it's best to look at it and to recognize it when it appears, because sometimes there's no signals on some of these fantastic buy or sell signals, sell areas, but you will start to recognize them. But there is some supply there though, That's looks like stopping volume, right? Down bar, very high volume, closing just off the lows, next bar's up. That's normally a sign of strength. After you see the downfall, remember, you have to have these down moves in the background because that makes the market vulnerable to professional monies fancying their chances to buy, absorb the supply and take it up. That's what happens. So the market does respond to that, goes up, although it's going up on no demand, look. That's all right. We've said that last week. We don't mind, excuse me, no demand, because we know that if this is tested, that's going to go up. In other words, a test, right? And so, yeah, the market's starting to fall, look, and there's a fairly widespread down, look. Now, the volume is considerably less, look, than here. Now, admittedly, it's higher, a bit higher. It'd been very nice if it came right down to this level, but in this case, it hasn't, right? But the volume is relatively low, look, compared to the volume here. That means that the supply that was here, seen by this high volume, has been absorbed. It's no longer there. And because the markets work on supply and demand, if there's no supply, then the market must be bullish, right? And then up it goes. They do this as well, these wide spreads up, because the professional people are reading these markets just like we do, and they want to cut as many people out of getting in on that as possible, and that's why they mark it up high like that. There's not a lot of volume behind it, but anyway, it's allowed to come off a couple of bars, and again the volume is low. So you know there's no supply at the moment. But up it goes, right? This is a 5-minute chart. This looks like some selling here, supply. So you're certainly not going to rush in and buy there at all. You could draw a trend line, I suppose, along here. Right, but it's Friday. Are they going to hold the market up and mark it up to mislead as many people as possible over the weekend? But there is supply, definitely on that bar, look. It's an up bar. Volume is relatively high, and it's closed in the middle. That's supply, definitely. But there's not enough evidence at that moment to say, right, this is the place to short. If you were long, you obviously have a stop under the last low, under the last reaction, actually. A stop is there not to protect your capital. That's what stops are for. Be quite honest, I don't personally use stops, because when I'm in a trade, I watch that very carefully, and I can see when weakness is coming. I'm out of there, and that's what I advise you to. It's not a place where you pray, hope, and the trouble is, see, mankind has got optimism built into it. Optimism, and that's all very well in real life, but it's not a good trait to have in the market, because there's no such thing as optimism or anything. It's either you're either right or you're wrong, and you can see the way these markets trend normally, that once you get locked into a bad trade, they don't want to let you out until the point is reached where they force you out by really lower prices and bad news. But that's what the 5-minute chart is. Any questions? Anything else?
Peter was just asking, I'll just go over to 1 hour of this bar. Does the non-farm payroll today have anything to do with this huge up bar? Yes, it was that. I think there was some other news as well. Employment something, wasn't it?
Well, The news. Does the news have anything to do with that? Well, it all depends how you look at it. The news itself cannot possibly cause the market to shoot up like that. Tell me, how is it going to affect a market as huge as the US cash market? That's where the equity lies. But what happens is that if you're a professional trader, they know perfectly well when the news is coming out, and you'd be very naive to think they didn't know what was in it. It's a big joke. You know, I laugh sometimes when I hear, oh, it's done this and done that on news. Of course they know. They probably even wrote it for them, right? And then they know that they can whipsaw the market on that news, right? And that's very profitable maneuver, to whipsaw the market on news, to confuse you, catch your stops, mislead you, anything, all sorts of good things come out of that, if they can whipsaw it on you like that. And that's what happens with the news. And you think about it, how on earth can a few figures that come out affect the massive US market?
That bar there, Tom, this here, what's this green box, is telling us no, oh, that's wrong, isn't it? No demand. It's a green box, but it says no demand, so that's a problem in the program. Yeah, but the program has picked it up as a green box, which is a sign of strength normally, a green box. It's not quite right. Okay. Edmund's asking a question. If the market comes down on good news, is there weakness built into the market? If it comes down on good news.
If the market falls on good news, not necessarily, because remember, they're not trying to help you. And if, I think that happened yesterday, didn't it, Rita? One was of good news and the market fell on it. Was it the Aussie dollar or something? But you can't trust them. The news cannot possibly. It's like watching an express train tearing down through the railway station, right? And then the light bulb goes in the toilet. So, oh, it's bad news. The light bulb's gone. Right, so you better all stop the train and get out. You know, it just doesn't make sense if you think about it. But they certainly use the news. I mean, we used to, I know, all the time. And, well, you can even create your own bad news. You can make things up. You can lie, in other words. You know, you'd be very naive to think that didn't go on. When there's money concerned and professional traders hate each other, they're at each other's throats. They're not too worried too much about you, but naturally they can still make money out of you. But don't forget, these so-called smart money, they've got 40, 50,000 contracts there in the arena. And if they can catch any of that, they're very happy to. Now, what are we looking at, Rita? Oh, there's the Aussie dollar. Now, that's an obvious upthrust, look. You can't, we saw that, right, pretty obvious. You almost have to be blind if you can't see that. Right, so there's weakness there, look. The computer tells us supply in the market, right. So they move it sideways, look, and then up. That's a classic upthrust because it's after weakness, look. And there's probably some weakness back here as well, right? and they will hold the market up if possible, so they can do these upthrusts. That's a massive money-making maneuver. They ram it up. Don't forget, there are not hundreds, but there'd be thousands of stops over and above these traded markets like this. And that's what they're after. They trigger off all these stops. Very, very profitable, right? And not only that, they mislead people. And it could have been on some news, I'm not sure. But it's so obvious. That's an upthrust, look, a sign of weakness. And we shorted that straight away, no problem. And you would, if you can't see that, well, I was going to say pack your bags and go, if you can't see that, because that's pretty obvious, isn't it? And it's an upthrust, it's a true upthrust, because it's happened after weakness look has occurred. Now, it's no good talking yourself out of it or trying to be too clever, saying, well, the volume's low here and this looks like a test and one thing another. Professional money know fully well there's weakness in here, and they know they mark it up given the opportunity. I'm not sure what time of the day that is. You're probably fast asleep. So that helps them, you know. If the rest of the markets aren't open, they have an easier time. So that's an upthrust. Okay. Any questions now? Because they happen all the time, especially at times like this when you've seen these longish bull moves going up. You will see upthrusts. And it's an ideal place to short. Anything?
Right, so the next question is from Steve. Hello, Steve. You've asked if we could look at gold 1 hour over the last few days. Is it accumulating? We don't get the hourly data, I don't think. Is that true, Tom? I don't think we do. But I mean, I can put this daily. This is gold daily chart. Yes. Steve says, over the last few days, is it accumulating high volume on down bars? Says it's been in the hourly chart. There's a sign of strength there on the daily. We can only comment on the daily, but we'll do that for now. But I know, oh, hang on. I know Gavin probably has the data. That says strength coming in, I think.
I personally don't follow the goal all that carefully, but I know normally when you see these gap downs like this, it's a built-in sign of weakness, and you've got one here, look. That's normally not a bullish sign. So I take all this with a pinch of salt. There is a little bit of, like here, look, there was some buying came in, but you can see the high volume. Somebody was buying. But this gap down like this is not healthy. Strong stocks don't do that. Right? And it went up a little bit on that because it went up on no demand. And the same thing's happening here, look. It's gap down. Although the volume is coming in, I wouldn't bank on that going up all that far.
Jacopo, I don't know how to pronounce your name, but it reads lovely. It looks lovely. Jacopo, you might have to explain that to me one day. He's given us a possible code ticker thing. I'm just going to give it a go, Tom, in case we might be able to GC F. Let's just give this a go and see if we do. No. Quite clearly, no. Never mind. Okay, so Let's get rid of that. Right, so that's back to the daily. Have you said everything you want to say on that one, Tom, or hang on.
Well, I would certainly be very, very cautious. And gold, it's not 100% professionally driven. You've got so many amateurs in there. People like gold, and they think it's fantastic. It is if you get the right side of it. But those gap downs like that, and normally, like here, gap down, built-in signs of weakness. And so you've got to be very, I wouldn't do anything there unless I saw a very, very clear principle. I'd want to see clear stopping volume come in. I'd want to see a little simple rally, perhaps rounding over, and then coming back down into that level on low volume, narrow spreads. And then I'd say, right, that's going to go up. But I think you'll find that those gap downs like that are not an inbuilt healthy thing to have. I mean, don't forget, you see, you've got many, many other charts that are clear. So why sweat over one that's not clear? That's what I would say. You're there to make money. So try to specialize in charts that behave themselves. There's lots of them there. Ones that will move. And you can come up and see the principle clear.
Shall I get you a glass of water? Yeah, fine. Okay, I'll just read this question out. There's a question here from Jean. All right, Steve says, thank you, Tom. By the way, your book is great. Really enjoying it. Thank you, Steve. Okay, Jean asks, hello, Tom. I am not successful with a decision from just one principle, so often I wait patiently for 3 principles, but by then the bus has passed and I have missed the trade. Do you act on just one principle or always a combination of principles?
Well, I always act on one principle. I mean, yesterday, Rita and I were watching this, and as soon as you saw that upthrust in Australia done, bang, here we go. Don't mess around waiting for trends or waiting for no demand follow-ups and all the rest of it. Now, of course, once you go in on a clear principle, you can then pyramid, which is a very good way to make money. In other words, if you're already shorted, and as the market falls, you see a no demand up bar, you know perfectly well it's going to come off more, so you can pyramid, otherwise you can short more. But it's no point trying to be too clever. If you see a clear principle, it's going to go up or it's going to go down. And I suppose you all know there's 3 at the top and 3 or 4 at the bottom. And you should not trade the market unless you can clearly see that principle at work. And that's why I always say, wait for your bus to come with your number on it and then jump on board. You don't just jump on any bus. You wait for that one that you know is going to take you home. That's your principle. And but you take this chart now, there's a little bit of stopping volume, but that's all. There's no other principle here at all. And you seem to have weakness in the background.
Okay, Tom's just having a drink of water. I hope to get rid of his cough. Edmund, I've just sent you a little message. What is the code we need for that, for the chart you're interested in us looking at? So Jean says, great reply, Tom, for your... Thank you, Jean. Just waited to hear from Edmund what the ticker name for that. I'm not sure. Right. So I'll try that with the daily. Hang on. that right? UUP. So, okay. Well, Edmund saying it's the chart of USD. Well, I'm assuming you mean the US dollar. I think it's a telling chart with some strength behind. If this is the correct chart, right? Okay, so this is it. This is the one, Tom. We've never looked at this before.
US dollar. We don't look at this one, but it's very interesting. It's interesting because look at that upthrust you got at the top here.
US dollar USD index.
All right. Well, look. See, all these principles come in different shapes and sizes. Now we see that there's some weakness come in here. That's what gives that red arrow. Look. We can see the very high volume. Look, has come in. Markets don't like that. So that was hit by supply. But the market is devious, it's cunning. They managed to hold it up, look, up, up, up. They know it's weak. And therefore on, may have been news, who knows. They mark it up, look, and that's a very, very clear upthrust. What does that say, Rita?
Upthrust.
They are upthrust. Now study these dialog boxes because we don't hold any secrets. We don't claim to have any secrets. We don't claim to have any clever formulas, nothing. Right? What you see is what's there, factual. Read these boxes. And of course read as many books and we got loads of discs and all sorts of things, look. But they are describing the upthrust, look. But see how it comes in different shapes and sizes? Here the weakness came in quite early, look. Is this, what time frame is this? Daily. Oh, well there you are, look, see? So, see how devious it could be? Mine, there's a test there, look. Now, I've told you this, I think last week, that whenever you see a red arrow appear, right, and here there's obviously some supply swamping the market. However, next bar's a test, look, and there's even a signal on it.
No supply.
No supply, right? But professional money, that's why they test it. And they can see they can hold the market up. And that's why I say to you, whenever you see, especially on the next bar, we were talking about that earlier on the chart, even now today, right? That's an example there. So you've got a red bar, arrow, sign of weakness, after an up move, professional money, fully of that. Sorry, there's somebody at the door. And there's a test, a clear test. Down bar, narrow spread, and the volume is low, look, and that's why it's gone up. But that weakness is still there, okay, and then the markup, the upthrust. That's a very, very clear upthrust. And
Carry on.
What? Oh, it's okay. Charlotte's arrived. That's Rita. Yeah, that's Rita's daughter. Now, what's interesting is there's a very clear upthrust. And look how very, very similar that is to what we saw in the Aussie dollar, look. You can short that immediately. And then we talk about pyramid, look. If you see a blue up bar on low volume like that, that's no demand in a falling market. And that's why it's fallen off like that. And there was a bit of strength that's come in here. Right, bit of stopping volume by the look of it. But although there was some buying there, we know there was some buying there. But don't forget they've got to accumulate for any substantial up move. And if they haven't accumulated, all they've done is just one bar down, okay, they bought. So the dollar looks as if it's fairly strong in a way. But you expect this market to roll over And if it falls back down into this level, that's important, and the volume is then clearly low, especially if it's colored pink by the computer, then it's going to go up.
Edmund has asked if we look at this back here. So September, October time frame. Trouble is, oh right, okay. I see. Yeah, I'll just explain what he's just said.
Yeah.
Shall I have the headset?
Hmm?
I need the headset just to. Oh,
sorry. All right.
Just to say that. Edmund said, if we look at this sort of September-October time frame, you'll see there is large stopping volume followed by falling price to the same price level with less volume. So Tom, I think that's there, and then it sort of goes over, and look, there's back down. So Tom can't see wonderfully clearly, so I'm just having to explain. So here's our volume here, yeah. And then we've gone, and then we've got that there, back down. So yes, well spotted, Idman.
Yes, that's very well spotted. Good. That's a principle, but you see how they all come in different shapes and sizes? That's why you can't stick to any time frame or anything, because every principle will look slightly different. I've seen stopping volume come in and test the very next bar. The market's so strong, it tests next bar and up it went. So, but once you know and recognize the principle, you'll believe in them well enough to go in and trade on them. And of course, now these days, you're very lucky because they've got these simulated platforms which you can practice. And I would strongly advise you to do that. I know it's not easy. We used to call it paper trading, but now it's made very, very easy for you. It's all done automatically, and but of course, if it's your real money, you're going to concentrate more, and that's why Rita's doing this blog, because it means that she's going to concentrate more. She knows perfectly well. It's a game of concentration. Understand, recognize the principles. And I know Rita specializes more on upthrusts because they are pretty clear. And there's plenty of opportunities there. And then when you see one, you can go in, and you'll be very, very unlucky if you didn't make any money. I'll tell you that now on upthrust. But that's what she specializes in. Okay.
Okay, Mark, yes, we will go finally at the end. We're just about to close, but we're going to go back. Mark's asked for us to look at the 5-minute of the ES. We will do. There's this one question here from Aaron. A few weeks ago, Tom concluded that INTC, I can't remember what it's called, what that represents, but this is it, Tom. I'll just put 20 bars. Concluded that it was weak. That was a few. Oh, Intel. It's Intel. Can he please have a look to see if that is still his assessment? Would you say it's weak now, Tom? This is Intel.
Right. Well, what's going to make it weak is, first of all, we have to look at the market here. First of all, we have seen a down move, right? It looks like stopping volume come in here, right? Now, had that stopping volume occurred before or after I said it looked weak?
No, you said a couple of weeks ago. So you were right, obviously, a couple of weeks ago over here.
Yeah, because I wouldn't have said it looked all that weak if I'd seen stopping volume like this, especially one that produced an automatic signal.
Potential stopping volume.
Yeah, which is true, you see. So it goes up on that, look. Now what we'd like to see is a test. Right, so here's a red down bar, and the volume, I'd like to see it lower than that, but certainly less than this. Right, so we are semi-bullish here. And now here's another one where the volume is a lot lower, look, because the computer's colored it pink, look. And that's probably why it's gone up those few bars. I personally would, now don't forget you trade in harmony with the index. Don't forget you trade in harmony with the parent index. Now you can't expect the stocks to be really bullish and shoot up if the parent index is weak. Now I don't know what this is on. It doesn't matter. They're all the same. We saw the Dow Jones daily chart. It's been going up on no demand at the moment. And it certainly looks as if it's going to hit that top trend line, or the recent one we drew. Excuse me. So I would say it's not the time to buy, because you must trade in harmony with the index. And you need to trade a stock that's acting as strong or stronger than the index. Now this one is not acting stronger than the index, is it? We saw the Dow was making fairly new highs there, and this certainly is making new highs. So you can't say it's stronger than the index. So you certainly wouldn't be enthusiastically to go start buying this. You trade in harmony with the parent index. Keep an eye on it by all means, because there has been some stopping volume in the background. But wait until a clear sign of strength appears in the parent index, and then you look at these sort of stocks. Then yes, it might go up.
This is the 5 minutes, Tom. I mean, I just showed a bigger picture. So this is our final question, just to from Mark. Can we have a look at the 5 minute of the E-mini S&P before we close?
Well, it doesn't look as if it's enthusiastically strong, does it? I mean, first of all, you've got definitely high volume and up bar. Markets don't like high volume and up bars. Right, now there's no signal on that one, I can see. Okay, but you can see there's high volume, up bar closing almost in the middle, look. Sorry, it's running live, look. And you've got an up move behind you. However, next bar's down, look. All right, there's no selling pressure. There's little or no demand on there, look. There's a little sort of test here. It's probably showing it is not a lot of supply, right? The story's unfolding. This looks to me like an upthrust, and this looks like a sign of weakness. I certainly wouldn't want to go long on the 5 minute S&P at the moment. Certainly not. Because that weakness there is being held up. Little test here. Okay, not a lot of supply on that. So enable them to mark it up, look. That is supply. Fairly high volume, right, being marked up, close in the middle. And there is a signal there, look, which tells you automatically that supply is entering the market. Now that's what's wonderful about these automatic computer signals, because a computer is not being misled. It's not listening to news. It's not listening to the guy over the road. It's not listening to his friends, his wife or his broker, right? It's just looking at the facts. And the fact is, I've just told you, and therefore it says, okay, you told me that, right, so I'm going to put up a sign of weakness. And so it cuts out all forms of emotion, which is a big handicap to the human trader, as you probably realize. If you ever make a mistake, if you look back, you can see where the mistake was. And don't forget, the weakest link is probably you. I hate to say that, but that's how it works. It doesn't pay to be too clever. It doesn't pay to ask too many questions. You just got to understand the basic principles of supply and demand. And you can see, undoubtedly, this is what makes the market move up or move down. It's a balance of supply and demand, which is quite logical when you think about it, because everything in the world works on supply and demand. Unless you live in a communist country where things are controlled to such a point, it doesn't work on supply and demand, but everything else does. And I'd say to people, well, we can prove to you what we tell you is true because the automatic signals. Computers just simply do not understand mistakes in your thinking or your logic. It just doesn't want to know. You've either got it right or you haven't. That's why it's been a lot of people try to copy this program, but I've never seen one yet that works. Now, why that is, I'm not quite sure. They obviously don't understand the market enough to make it work. And don't forget, these signals, many of them are 10, 15 years old, and they've been working all the time, and they'll be working in the future for 10 or 15 years, because that's how the markets work. And somebody said to me, yeah, what happens if market conditions change? Well, that's simple, because all that happens is the volume or the activity below changes and the price spreads change. And that's all it's looking at. It's not looking at anything else. We don't hold any secrets. We don't have any secrets. Any question we'll answer. If you want to know what brings a signal up, we're quite happy to tell you. It's all in the dialog box anyway, most of it. So saying all that, I'll say thank you very, very much for listening, and hope you have a nice weekend. Have a look at Rita's blog, and you'll be surprised. So I'll say good. I won't say good luck. I'll say concentrate and study, and you'll be successful. Now, we do a newsletter. We're doing Sunday this week. So I say goodbye.
Yes, we'll be doing the newsletter on Sunday, and it will be up sometime during the day, Sunday. So thank you very much, everybody, for joining us. It's been a good session. Lots of thank yous here, Tom, from everybody. Thank you, and you all have a great weekend, and we will see you next Friday, same time, same place. Thank you. Bye-bye.